Welcome to our Green Up TV show. Hi everyone, and thank you to all our viewers for joining us today with this final session for this morning, where we'll deep dive into the state of play of carbon capture, use and storage, the CCUS. I am Laurie Chenet, your host this morning, along with my co-host Aymeric Chauveau. You are an energy transition industry banker at NATIXIS CIB. Hi, Aymeric.
Hi, good morning, Laurie. Hello, everybody. Thank you for joining us. Yeah, CCUS is indeed a very hot topic. It's on every lips these days. And we recently saw the opening ceremony for the first ever international CO2 storage hub in Norway. It's a big project. And before starting the discussion with our guest speakers, Etienne Anglès-Doriac and Thomas de Charette, let's have a look at the Northern Lights CO2 storage project through this small video.
What I have in my hand here is a piece of rock from the Aurora Formation where we will store CO2. But above it, we have this waterproof rock, which makes sure the CO2 stays in place. Here, Northern Lights are building the world's first CO2 terminal. Most places in the world, you cannot do CCS because you don't have the geology. Norway, and more specifically offshore Norway, have the right geological conditions for storing CO2. That means you have a porous rock deep below the seabed where you can actually inject the CO2 into. And that is sealed by other layers of rock above it that keeps it in place. At a certain stage, you reach a pressure where you say, now we do not want to expose the rocks above our formation for a higher pressure. And that's when we stop, and then we will continue to monitor that field, that area, to make sure that we have control over the CO2. You need the geology, but you also need expertise to drill the wells and put in all the infrastructure around it, which is typically being developed by the oil and gas industry. It is the French TotalEnergies, it is Shell, and it's the Norwegian Equinor. They each own 1/3 of this company. In order to bring the CO2 from where it is emitted, we can use a ship. But if there is a lot of CO2, then down the road, I think pipelines will be a very interesting alternative to transport large amounts of CO2. We have entered into 2 agreements already. First of all, with Yara, an international producer of fertilizers, and they have a plant in the Netherlands. We have agreed to take 800,000 tons per year of CO2 from this facility. I believe Norway can play a role to help EU with storing the CO2 that they have. And I believe that it can also be an interesting business for Norway as it builds on the competence Norway has developed over the 50, 60 years of oil and gas production.
Yes, it's clearly a very interesting topic, and we will discuss this project in more details to see if it's really a breakthrough technology or something that is more in line with what has been done in the past. And to start the discussion, let me introduce our guest speakers today. Etienne Anglès-Doriac, who is VP of the CCS business unit at TotalEnergies, and Thomas de Charette, who is head of decarbonation at Lafarge France, which is part of the Holcim group. So let's start discussion with Etienne. Etienne, TotalEnergies being part of this project and a sponsor of this project. Is it really a breakthrough? CO2 has been injected in the North Sea on other projects for decades, or injected underground elsewhere. So is it a breakthrough?
Thanks, Aymeric. Very glad to be here this morning. Well, it's first of a kind. In the past, there's been projects to store CO2 from native CO2 in various assets in Norway, Sleipner, Snøhvit. And in the US, you've had some CO2 for enhanced oil recovery purposes. So storing of CO2 is not new, but what is really new, and that's why this project is first of a kind, is to propose a service to the industry to store CO2 from various emitters, cement, waste to energy, power generation. This is brand new. Is it a breakthrough, a technological breakthrough? Not really. We are just gathering pieces of a puzzle that already exist. It's not the storage part. We have to understand geoscience, the behavior of reservoir. We've done that for years in the oil and gas industry. We know that very well. Transportation is a bit new. Transportation of CO2 on ships, large ships at a given pressure and temperature is a new technology. And for the capture side, I mean, Thomas will talk better than me on that side, but it's a very standard technology, amine technology. So the challenges are not really a technological challenge. It's more economical, bringing everybody all along the value chain, rather than technological challenges.
So maybe question for you, Thomas, now, as a CO2 emitter. Is having such international storage hub as the one that we've seen in Norway enough for you to take the final investment decision in capture projects?
Okay, thank you, Laurie, and again, very glad to be here also with you. It's very enthusiastic to see that it's this first of its kind, meaning the full chain of being able to capture CO2, transport and store it in some geological formation. But obviously, as it was just described, the whole chain and the whole value chain of a CCS project is quite complex. Each brick are not necessarily technological breakthrough, but it's quite complex, and you need to align all the actors of this chain, and all the planning has to be aligned, so at the end we can make a final investment decision. So the final investment decision, for sure, it's important to have the storage, but there is a lot in all the bricks of this value chain. There is some key challenge. There is, for example, something which seems obvious, but which is not. It is the specification of the CO2. We are talking about CO2, but in fact CO2, it is almost 100% of CO2, but some very, very small percentage, even below the percentage of some other elements, and this has to be very well measured and in a certain quantities, and we need exactly to know what will be the specification of the CO2, because it impacts storage, but it could impact transportation. And at the end, the more stringent you are on the specification, the higher the cost is. So there is also a trade-off to be made on specification. This is one example about on other many examples, but just to understand that for sure it's very enthusiastic to see that now in Norway we are able to store CO2, but this is only the beginning of the story regarding carbon capture and storage.
Okay, and coming back to the capture technology by itself, so you're dealing with cement plant that you're willing to decarbonize. What are the specific challenges you can see on a capture on a cement plant compared to other industrial emitters?
In fact, cement activity, cement industry, we have a specificity, which is that our CO2 is only from one third is coming from combustion, so that we all know. So the target for us is to get out of the fossil fuels in our process, but 2/3 of the CO2 is coming from our raw materials. We are using limestone to produce cement, which is very abundant on the earth, and it is very easy to take this limestone, and it's very convenient to produce cement because it gives all the property of the cement, but inside the limestone you have 40% of CO2. So as soon as you are putting your limestone in your process and you are heating the limestone, then the CO2 escape. And we need this CO2 to escape in order to produce the cement. So we are in a kind of something which is quite complex. We need the limestone for the cement, and we need this CO2 to escape because otherwise we'll not be able to make cement. But then we have a big emission of CO2 coming from our raw materials, and then we need to capture the CO2, and the only levers that is really efficient after, as I was explaining, getting out of fossil fuel, for example, or after having changed the recipe of the cement, we can modify also a little bit the recipe to reduce the CO2. But at the end of the day, if we are using the limestone, then we'll be obliged to go for capture of CO2. That's why cement industry and lime industry are very specific, and they are really the industry that really needs that technology of carbon capture to decarbonize and to be net zero in 2050, which is our target at Holcim.
Thomas was mentioning that each element is complex from a technology perspective. So interesting to have your views, Etienne, on this question. So from a technology perspective, which is the most complex element in the value chain? Is it the capture? Is it the transport? Is it the underground storage? And is the technology at sufficient technology readiness level at each segment of this value chain?
Well, complexity and breakthrough, I think, are different. I think the places where some breakthrough could take place is definitely transport. It's not the most complex part, but it's the part where I would say the TRL, the development stage, is lowest. And at the moment, for Northern Light, we are transporting our CO2 at we have vessels of 7,500 kilometer cube that are, and CO2 is transported as at 15 bar minus 25 degrees C. And it's quite expensive to transport CO2 under pressure, and the volumes are fairly limited. CO2 is a very special component because at atmospheric pressure, if you lower the temperature of CO2 at atmospheric pressure, it will go from gas to solid. It will not go through the liquid phase. So you cannot transport CO2 at atmospheric pressure. You have to pressurize it to transport it. And pressure is expensive because you have vessels and everything. So at the moment, we transport it at 15 bar minus 25 degrees C. But the studies are being done to lower the pressure closer to the triple point of CO2, which is 5 bar. So we could go to 7 bar, it would be cheaper, and we can increase the size of the vessel. For the second phase of Northern Lights, we intend to use 12,000 meter cube vessels. And for our Asian project, we are looking at much bigger vessels. Transport in Asia will be a key element for CCS. Distance between emitters and storage are huge, between Japan, Korea. The emitters are in Japan and Korea, and the storage are in Malaysia, in Australia, in Indonesia. So you get 5,000 kilometers. So without cheap storage, there will not be any CCS development in Asia. So storage is a key element. For the rest of the chain, I would say that amine capture is very mature. We've been using amine for a century now. I mean, in refineries to capture acid gas, H2S, CO2 has been done for years. So it's a very mature technology. Cryo technologies to cool down CO2 to separate it is less mature. But I'm sure there can be some breakthrough in the capture side that is very energy intensive at the moment and expensive. It's more than half of the cost of the value chain is from capture. It's the most expensive part. For the rest of the chain, I would say the storage part, the part we manage and we master with the oil and gas industry background. There is no, I don't think there will be a very strong breakthrough because it's standard wells, standard piping, compression, transport. I mean, things we've been doing for years in the oil and gas industry. We're just going reverse in terms of flow. And the effluent is a bit more acidic than what we're used to, but otherwise it's standard technology, I would say.
Okay. Thank you very much, Etienne, for this very insightful comments, and thank you, Thomas. I think so. We touched based upon the capture part, the transport, and the storage. There's one point of CCUS we did not mention yet, which is utilization. So we know that most of the CO2 that will be captured will be going to underground sequestration, but part of it might be used. So maybe a question for you, Thomas, how do you see potential uses of CO2 in your industry or more globally? I don't know, through synthetic fuels, through recombining CO2 in some building blocks. What are your views on this?
I think it's a very interesting question, because what we are talking about for the moment is to say we have an issue with CO2, which is seen as a pollutant, and what we want to take is to capture it and then to sequestrate it, which is normally the sequestration. Normally is the last option that we want to do, even though that for the CO2, in fact, we are putting again the CO2 where it comes from, meaning in the ground. So there is another option for CO2 that we could use it in order to produce some molecules, because CO2 is carbon and oxygen, and if you combine this with hydrogen, green hydrogen, then you have the three main atoms that you can do whatever you want in terms of organic and synthetic molecules. So it's very interesting. For the moment, the CO2 that we are capturing, there is two big categories of CO2. There is the one which is so-called fossil CO2, that is coming either for combustion or for process, as I was explaining, meaning that the CO2 that is coming from the limestone is seen as fossil CO2 in the European regulation. And you have biogenic CO2. This biogenic CO2 is coming from combustion of biomass. And this biogenic CO2 is not affecting the climate, because it's supposed to be again captured by the biomass. So at the end, it is not enriching the concentration of CO2 in the atmosphere. But this CO2, you can use it in order to produce, for example, some fuels for maritime activities or even for aviation. And then by doing so, by using this CO2, this biogenic CO2, you produce a fuel which is with almost no impact in terms of CO2, apart the production and the transportation, etc., of your product. So you are able to decrease the CO2 content of the fuel by more than 70% by using this biogenic CO2 and making the transformation. Obviously, this is like big plant. This is you need to build a plant that costs most probably almost $1 billion in order to produce this. But at the end of the day, you are able to produce again this type of fuels, maybe in Europe, maybe in France, and to decarbonize, thanks, if I could say, to the CO2 of industry. You can decarbonize other industry like maritimes and aviation. And Europe is pushing for that, because they are, for the moment, for the aviation, for example, for the aviation sector, there is a mandate of incorporation of this type of fuel that are so-called e-SAF, E for electrical, because they are produced through electricity, because you are using hydrogen, green hydrogen by electrolyzers, so they are so-called e-SAF, E, sustainable aviation fuel, and there is a mandate of incorporation of this fuel in the mix, in the fuel mix of the aviation, starting in 2030 by, I think, 1.5% or something like that, and then it's going up to 2050. So it's a very good option. It is most probably less mature, but there is some very good perspective on the CCU.
So this is now clear that we definitely need CCUS to decarbonize some hard-to-abate sectors. And we've seen that the technology is not so new per se. Large-scale projects are already taking final investment decision or coming into operations. But you already mentioned that as well. All of this has significant costs. So how does the CCUS economic model work, and actually, who pays for that?
It's an excellent question. I think we can notice that the very recent announcement from the UK government to pledge more than £22 billion to support the development of the CCUS value chain in UK, which is significant. So let's connect with our Rebecca Smith, who is our UK correspondent. She's live from an industrial site which is willing to decarbonize. So Let's hear Rebecca.
Yes, absolutely. I'm here in front of a flagship gas power plant in the UK. So it's necessary to have this to allow more penetration of renewable energy and its intermittency to bring more stability to the grid. But it's a gas power plant, so it needs to be decarbonized with carbon capture technology that in this case would allow the capture and sequestration of 1.5 million tons of CO2 per year. But it has a cost, concretely, the doubling of the cost of an unabated gas power plant. And this is where the UK subsidy comes into place, this 21.7 billion package that covers all of the CCUS value chain. It also solves the chicken and egg problem of should we finance first capture or storage, because it finances all of them. So it provides subsidies to companies both in transport and sequestration, and also emitting companies like a power company or a cement company. The package also provides coverage for all kinds of risks. So this enables financial institutions and private investors to finance these projects and solves the financing bottleneck. So thanks to this, in 3 to 4 years, 90% of the CO2 from this plant will be sequestered. To be clear, though, this is not a miracle solution. It's only part of the overall solution of a transition electricity mix alongside the development of more renewable and low carbon energy production.
Thank you very much, Rebecca. Really insightful example. So with these two transport and storage hub in the UK, it's now one of the real game changer in the CCUS market. UK is really taking the lead on that front. One question for you, Etienne. What is actually the additional cost that you will face compared with an unabated plant, or if you want to avoid the cost of the CO2 tax? And do you think that concretely carbon capture projects can work without these types of subsidies and regulation that we see in the UK, or more broadly with the support of the EU Innovation Fund?
Maybe, I will let you comment, Etienne, and also maybe a question for Thomas, I mean, on the capture cost side.
Okay, so...
on the fact of having or not having subsidies, subsidies are necessary at the moment on the CCS value chain. The CCS overall cost is around $100 to $200 per ton. ETS is at 65 or something like this. We see it in 2030 at 100, 150, depends on which consulting company does the analysis. But basically, it will not be sufficient to pay for the whole value chain of CCS. So each country has developed its own incentive. The UK has done it, subsidies. Netherlands is doing it. France is thinking about it. Contract for differences, direct investment, like in Norway. Norway has been paying 80% of the first phase of Northern Light. Netherlands is putting some contract for differences mechanism. Basically, the contract for difference mechanism, they just bridge the difference between ETS and the cost of the value chain to make it economic. So to answer your question, yes, subsidies are required, are necessary, and they are there in the UK. I mean, and Rebecca, your correspondent gave said most of it. But the UK model is a very interesting model because it's a fully regulated model. So it's always a discussion whether it should be regulated or not regulated. You know, in the oil and gas industry, we don't really like regulated models. But anyway, for a budding industry like CCUS, actually it works quite well. And we've seen it with the launching of the NEP project that is currently being launched. So regulated model, the advantage is there is no chicken and egg issue. Everybody starts at the same time. The state is taking all the risk, all the liabilities, fully supporting the whole value chain. Returns are regulated, they are fixed, there is no risk. There is no upside, that's a problem, but, and it's very good for project finance because the banks are really interested in financing this because they don't see any big risk and the state is behind it. So it attracted a lot of project finance. It was largely oversubscribed. And so it's a project that is strongly supported by the financial community. Of course, it has some drawbacks. The drawbacks are basically that there is no upside. So for an industry like the energy industry we are in, we are used to taking risk, we are used to having upside, and to invest in something without any upside is always a bit difficult. It's not in our culture. So that's why we have only 10% equity in the NEP project. And the second drawback is maybe the cost. The cost of that project was a bit higher than what was expected by all the parties. And you know, the contractors, they know that the state is behind, so you don't know whether this is the reason why, but there may be a link between the final cost of the project and the fact that it is fully regulated.
Okay. And regarding the capture, so several points also. So for sure, the funding are necessary at the beginning of this new technology. First of all, it will help that this project, they can manage to have a positive NPV, and so this will help then the financing, the private financing of this type of projects. So this is for sure very useful. As it was said, today the total cost of CO2 that is captured, transported and stored is, let's say, 200 euro per ton, let's say between 150 and 200 depending on the project. And for sure, the other thing that is really needed for that project to be live, that we have a cost of CO2 that continue to increase, for sure. Today at 65, it is not enough. This is the second point that is very important. And the third point also is related to this UK model, which is maybe over-regulated, but at least there is a de-risking phase. So at least for the first project, what is the big elephant in front of us is that this project, it's addition of part of a chain, and there is as many partners as pieces of the puzzle or of the chain. And each of the partners, they need to take the final investment decision more or less at the same time, so otherwise it will never fly. So when you are making an Excel sheet and you are putting everything on an Excel sheet, obviously you are always in the same column, everybody is ready at the same time. But in the real life, there is a big chance that this will not happen like this, and there is really a need that we find some ways of de-risking the fact that all the pieces of the puzzle will not exactly happen at the same time. And then if, for example, emitters are ready, but storage is not ready, then the emitter, they have invested a lot, but they still have their CO2 emission and they still have to pay the tax. At the contrary, the storage is ready, they have invested a lot, but then they cannot get the benefit from the value of storing the CO2. So there is really a critical point, which is de-risking this planning, and this is something that really needs to be think about, and maybe take the example of the UK for future regulation in Europe.
Yeah, no, indeed, UK seems to be a great example, maybe over-regulated, but a good starting point. Maybe in comparison with another jurisdiction that is supporting the value chain, but with a very different approach. I'm talking about the US. Maybe, Etienne, if you want to comment. So through the Inflation Reduction Act, you also have exposure in the US. So to you, what are the main differences between the two schemes?
As you said, Mike, it's a different model. The US is more the carrot, and Europe is more the stick, as we say. But in fact, the financial incentive at the end is not very different, because in the in Europe it's ETS 65, but it could go to 80 or 100. And in the US, it's the 45Q incentive, $85 per ton for each ton of CO2 that is being stored. But the huge difference between Europe and the US is the technical cost. Technical costs are 2 to 3 times lower in the US than in Europe, unfortunately for us. We have much more projects in Europe than in the US, but and it is like that not for contractual reasons, but for structural reasons. Unfortunately, it will not change, because there are many reasons why it's cheaper. First, in terms of advocacy, they accept to do onshore CCS, which we do not in Europe. We believe that onshore CCS will never be accepted by the population to store CO2 under their feet. It doesn't work. So from that, the storing places and the storage And the emitters are very close one to another in the US. The distance to travel are very short, whereas in Europe, the distances are huge. We take CO2 from Netherlands, from France, and then we ship it to Norway. It's quite expensive. So very small distance between emitters and storers. Some pipes are already existing in the US. They've been transporting CO2 for years for enhanced oil recovery. So sometimes the transport is already there. It's very cheap. And drilling the wells, making the facilities is much cheaper in the US than in Europe. A well in the US costs half, a third of a well in Europe, because they've been drilling hundreds of thousands shale oil and shale gas wells in the last 2 decades. So it's been industrialized and it's very cheap. So technical costs in the US will remain much lower than those of Europe. So we have to progress in Europe and to fight for our industry, because it's really it's key for our industry to remain sustainable, and we don't want industries to relocate in the US because energy is cheaper and CO2 storage is cheaper. So we have to fight for reducing our costs in Europe.
Okay, very clear. No, it seems that the challenge really to find a suitable regulatory environment and public support to launch the value chain at scale. So maybe as a reminder, CCUS is seen as part of the solution, with the need to store up to 6 gigatons of CO2 by 2050, according to the net zero scenario of the IEA. So it's really key to be able to develop this value chain. How do we do it beyond the initial public support? What are the key challenges to overcome? So let's discuss this point. To start with, maybe a question for Thomas. Can we expect a reduction, do you believe, on the cost side in terms of capex and opex for capture? And do you believe that you can expect different outcomes depending on the underlying industry?
Yes, hopefully we expect that the cost will go down. Like all the new technologies start with a high cost and then after it's decreasing. We believe that on each piece of the puzzle, again, there will be opportunities of decreasing the cost. There will be more and more storage available, so we believe that the cost of the storage through the competition would decrease. We are not as pessimistic as Total Energy. We believe there might be some onshore storage in Europe, and hopefully we believe this is feasible, and this will have for sure a much lower cost than the offshore storage. Regarding technology of capture, obviously there is more and more companies that are trying to develop capture technologies. Today, one of the big part of the cost of this technology is power, electricity, because they are really electricity intense. So we are, and as in Holcim, we are also pushing for developing new technology. We are investing in a platform in one of our plants to test some new technology of capture, with the idea that this new technology will have a less intensive electricity consumption. So on the capture, we believe that there will be some option. On the storage, there will be some option. And then regarding the transportation through pipeline, we know, and the French government is trying to design what could be a regulated way to transport CO2, so that we will have something which will be at least predictable in terms of cost from the transportation. So we believe in each piece of the puzzle there is option and opportunity to decrease the cost of the CCS for sure.
Okay, so to improve the economics, two ways we're cutting costs, of course. On the revenue side, beyond public support, Thomas, again, do you see any other source of revenue?
Yes, something that we did not discuss, yes, for sure. When we are implementing carbon capture and storage of the CO2, then the cement that we are producing is net of CO2. There is no more CO2, or very few CO2, let's say, because there is still a little bit due to transportation and things like that. Scope 2 and Scope 3 still remain, but Scope 1 has disappeared, and Scope 1 is really the biggest part of the CO2. So we're able to propose to the market products that are really completely decarbonized, and these have a value, obviously, because we see that for the construction, more and more construction companies, they are sensible to their CO2 footprint of the building. There is even some regulation in France that are trying to push to have less and less CO2 intensity in the square meters that are built. But what we imagine that this will continue to be more and more stringent, and then with our product, that will be completely decarbonized. We will be able to propose a solution that will help completely decarbonize the building, and this has a value. And we really believe that there is a place where we could put a green premium, what we call a green premium, on our product, so as to better valorize the product, where we invest a lot to decarbonize. And then there is also, if we continue on that topic, there is the proportion of the CO2 that I explain later on that it was biogenic CO2. So this CO2 is not affecting the concentration of the CO2 in the atmosphere. So if you take it, either you can use it to make methanol or SAF, or if you sequester it, then you are decreasing the concentration of CO2 in the atmosphere, and this has a value. This you can also create a credit of CO2 that you can sell also. This is something we are also looking. We are very careful with this because we do not want to make any greenwashing out of this. So we are very careful. We are following what is happening on that market, the voluntary market of the CO2. But this could be, for sure, in the future, an opportunity of additional revenue.
Okay, so there is hope. There are ways to improve the economic model beyond the initial public support, which is clearly needed in some jurisdiction. But apart from that, I think there are still other challenges to be faced. What are your views, Etienne, on this?
I think, well, Total Energy is very keen on CCS, and we've been investing in CCS for 15 years. We did a pilot in 15 years ago. Christophe de Margerie, Patrick Pouyanné, they took some very strong positions, and we are investing around $100 to $200 million per year in CCS. But still, as you said, there's a lot of challenge, and we are realistic, and we see a lot of challenge in this industry. I would say the first challenge is the chicken and egg issue, is the alignment of all the value chain, and it's been solved, I would say, this challenge in the UK with a very regulated model, but those type of model cannot be replicated everywhere. So it's a real challenge, and one illustration of that challenge is Northern Lights. We've inaugurated Northern Lights, as you've seen in the movie, but the plant is still empty now. We're still waiting for CO2, which is quite unusual for a plant to be inaugurated without the clients, and we'll be waiting until probably mid of next year. So it takes time, and we see some disalignment between storer and emitters, and we want to launch phase 2. Technically, we are completely ready to launch that phase, and the remaining block is to get commitment from Lafarge, from emitters, from cement, from strong binding commitment to be able to launch the plant. So this alignment of the value chain is absolutely key, and the state has a role to play, regulation has a role to play to help that. Second is, as I said, is cost. Cost in Europe is still high. We need to reduce our cost and to be competitive with the US. And cost in Asia will be difficult also because there are very long transportation. A few thousand kilometers of transportation would be quite expensive, so reducing transport cost is key. The third challenge is obviously regulation and permitting. We've seen on the Porthos project in Netherlands that they've lost nearly 2 years because there were some challenges. We have a challenge also on NEP in the UK. Who is taking the liabilities is also a key issue. Does the liability remain with the storer, with the emitter? Who owns the CO2? Is the state ready to take over the liability of CO2 after a given period of time? In Europe, it's after 20 years after the last injection day. But it's quite worrying for a big company to take indefinite liabilities for an indefinite period of time on that. Advocacy, I would say, is the last challenge to make it acceptable. We see some opponents to CCUS in the media, in particular because sometimes they see it as an extension of fossil fuel burning, which is not the case, by the way, as Thomas mentioned with cement, for example. 2/3 of the CO2 is coming from processed CO2 and not coming from fossil burning. The 4 first clients of Northern Lights in Norway are Norcem, a cement company, so it's CO2 coming from process, not from burning fossil fuels. Celsio, which is a waste-to-energy company, burning waste. Again, it's not coming from combustion of fossil fuels. Then we have Yara, which is a fertilizer, getting CO2 from its process again. And then we have Ørsted doing some BECCS, bio-CCS, so burning biomass to make electricity. So again, it's not fossil CO2. So we see that the first clients are bringing processed CO2 or biogenic or bio CO2 coming from bio CO2. But it's still a challenge to convince everybody that CCS is key to the energy transition.
And we had a first session this morning on Green Up TV focusing on carbon pricing and the end of the free allowances for some sectors. From your perspective, and you mentioned that already, the fact that the carbon price will be higher, it will increase. We don't know exactly to what extent. So do you think that having higher carbon pricings or prime prices is a credible and a required additional lever to scale up and develop CCUS project? And if so, to what extent? Is there any threshold that you feel are relevant to achieve?
Well, for sure, the target in any case in Europe is to make the CO2 price increase on the market, on the regulated market, the one that we are part as a cement industry, and we are buying CO2 every year, depending on our level of emission on the market. And on this market, today the price is 65 euros per ton. It used to be below 10 after the crisis of 2008. It rise up to 100 just after COVID, or just before, I don't remember, but a couple of years ago. And now it's 65. And as I was explaining, the total cost of capture of CO2 up to the storage is more or less 200 euros per ton. So we see that there is a gap, and we see the interest of making this CO2 price increasing. And I don't know if there is a target or if there is a maximum or whatever, but the more it increases, the more it makes the capture and storage relevant and viable and things like that. And so this is for sure that we need to have a CO2 which represents, in fact, the real cost for the society of what is happening with the climate and the impact of the CO2 on the climate. So this is not a taboo to say that this CO2 cost need to increase as much as we can, so that we will be able to invest as much as we need in order to decrease CO2 in the atmosphere.
Yeah, I fully agree with what Thomas said. I think if we invest in CO2 management, is because we believe that CO2 value will increase in the future. Otherwise, we shouldn't invest in that industry. So we believe that it will increase, but society takes time to accept a higher price. It makes me think, at the valeur tutélaire du carbone, I don't know how you say in English, but there was a Kiné, I think it's Kiné, and many economists made a calculation of the value of carbon to society. How much does a ton of CO2 will cost to society if we discount the impact of that ton of CO2 in the coming years with a low discount rate, of course, to make it conservative. And the value is always around 250, whatever the economist assumptions are, or much higher, but 250 is really the lowest So in principle, CCUS is in the money with such price. But our society are not pricing CO2 at the moment at that level. But as Thomas said, we believe that CO2 price will and should increase, and it will make also a mechanism much more transparent and easy to understand, because at the moment it's too complex with ETS, contract for difference, and subsidies of all kind, SAFE, Innovation Fund, SD++. Every country has its mechanism, and it's a bit complicated.
Thank you very much.
Thank you very much for all of our viewers today, and a special thank you for our estimated guests and their valuable insights. We will come back just after the lunch break. We will decrypt the 2024 election outcomes, and we will question to what extent it has impact on sustainability practices and policies. So please stay with us.
Thank you.